Hello guys, if you are not from the commercial background, it is very difficult to understand accounting and financing. The same problem happened to me 2 years back, and I literally don't have any idea about finance and accounting. Then I came across a video explaining the golden six elements about finance, and from that day onwards, I have I have developed accounting and financing knowledge, and on top of that, I can understand investments and bankings and the core concepts about finance and accounting. So today, through this video, if you are also from any background that is not from commerce, then it will definitely help you. So let's start it without much delay. So I have come across these six elements of finance, and I have given a name into it, the golden six elements of finance and accounting. Okay, before we further dive into it, let me give a brief introduction about this video and what you are going to learn and what you are going to see through this video. And these six elements are the pillars and the foundation of accounting and finance, because everything revolves around these six elements. If you want to understand financial statements of a company or business, you can definitely understand it with the help of these six elements. These elements are the best friends for investors and business analysts. Let's get into it. And we are using a very concise and simplified method, and we have taken one word that is called dealer, dealer, dealer. We are using this word because of convenience and for memorizing purpose. Let's segregate into two parts. DEA one part, and LER is gonna go into another part. Okay, this DEA stands for D for drawings, E for expenses, and A for assets. Okay, these three elements have debit balance, and the reason why it is debit balance is because it is just plus and minus, and there is no logic behind it. It is just simply adding or subtraction, or increase or decrease. It is that simple. So you don't have to think why it is debit or why it is credit. So, and the LER stands for L for liability, E for equity, and R for revenue. And these three elements have credit balance. Okay, my friend, we are gonna look further into these elements. And drawings is nothing but it is the privilege held by a business owner to withdraw money from its own business for personal use. Okay, if you are a business owner, you have the privilege to withdraw money from your business. And expenses, as we all know, expenses, while running a business, we have to incur many expenses like rent, electricity, and many more other expenses. And A stands for assets. So it is very important to know these technical terms and the technical definitions in order to understand, in order to have an insight knowledge. So A stands for assets, and its definition and its meaning is very important. Asset is nothing but it is an object which I can control anytime, anywhere I want, and that object is going to give me benefit in the future. That type of object is called assets, and it is obvious that it will give me value in the coming days of the business, in the course of or further of the business. Yeah, this all have debit balance. Okay, if any event happen of these three things, okay, then we will debit that amount. Or if this event decreases, meaning I once bought a car and I have sold that car, I will credit that selling price, that amount, when I dispose the assets to a third party. So LER have credit balance, as I have told you before. L stands for liabilities. Liability means nothing but it is an obligation or an act that is due to be performed from your side. Okay, it is due to be performed by you to a third party in the future. Yes, and it is an action due from you. It may be monetary or non-monetary, but it is the due, that debt that is to be fulfilled by you in the future, and that type of event is called liabilities. And loans and borrowing, short-term, long-term borrowings are simple example of liabilities. And E stands for equity. Equity is nothing but it is a capital introduced by the business owner to start its business. So yes, it is the capital amount that has been introduced to establish the business. Further, capital may be invested time to time. It depends on the decision of the business owner. And the last one, that is revenue. Revenue is nothing but it is an income generated while doing business, and it is a reward for doing business. So I hope you find something valuable from these insights elements, these golden elements, and you can apply this in your personal finance. Suppose I want to buy a car. Will that car be a liability or asset? That depends on you.